Hey everyone, and welcome to what I guess is a stock spotlight video. Today we're going to be talking about TD Ameritrade. One thing to note as far as why this is going to be a stock spotlight, it's going to be because I recently added a position in this. It's a company I haven't been holding before, but I recently just decided to add a position. And there's a lot of reasons for this. I'll go into it. One major thing, this stock's been beat up pretty heavily, and a lot of the reason for that would be TD Ameritrade following Schwab and going to commissions-free investing, right? So when Charles Schwab announced they were doing commissions-free investing, this stock got hit very hard, right? Because I think investors saw the writing on the wall. This is what's going to happen to every company. You know, Robinhood started off this trend of no commissions. People are losing business because of this. You know, more investors are going to these, more younger investors are going to these places that don't offer these or don't charge these fees. And heck, I mean, all you need to see is yesterday when Charles Schwab announced it, or Monday, I should say, down 25% just from Monday, right? That's crazy. And then from there, we've been still hit as far as Tuesday into Wednesday, still down another 3%. And today, guess what? Down another 1.6%. So yesterday, part of the reason that there was a little bit more of a downward move again was because of the fact that now TD Ameritrade decided they're going to be getting involved in this commissions-free area as well. So they announced starting today, Thursday, day of recording this, Thursday, they're going to be starting to do commissions-free investing. So that's crazy, getting rid of all their fees. Something interesting to look at, obviously. It interests me quite a bit, but we're talking about the stock right now. So why did I decide this is the time to come pick up some shares? So I believe my cost basis on these shares was $33.07 per share. So obviously still down a little bit, but I felt like we're going to be close to the bottom. I certainly could see things going a little bit more awry. There's still a couple companies I want to see that are going to be announcing this commissions free eventually. I want to see how that weighs on investors. Obviously, we've had a pretty big market sell-off over the last 2 days as well, which is part of the reason why this stock has hit so hard on top of that. But Fidelity, I'm still waiting on Fidelity to announce any sort of commissions-free trading. If that happens, I could see a little bit more downward move, but we'll see how it is. I think right now we're at a pretty fair valuation. So if we're looking at TD Ameritrade, what interested me right now with a PE ratio right around 9, certainly a company that I would not consider overvalued. I'll tell you that. I certainly believe this down 30% over the past 3 days, just this week down 30%, absolutely makes this stock undervalued, very undervalued. And I think it's something you can see in our price chart here. We'll just go 5 years out. It is a growing company, and then just absolutely hammered. Over the past little bit here, past year, down pretty rough, around 20%, and that's really mostly because today is just wearing down on it, right? Today, this whole week has been rough. We don't even. I mean, just look at that 5 day. That's ugly. Even 6 months, it looks like a tornado hit. Goodness. So with this kind of PE ratio, it's something I'm very interested in. That's why I picked them up today. It's just not a company that's by any means overvalued. I can't see a way to consider this overvalued. One thing to consider, though, I must say this, with this commissions-free investing from TD Ameritrade, they said this looks like it's going to be around 220 to 250 or 240 million per quarter. So if we're going to round it up, I'm just going to say it's going to be a 1 billion annualized decrease in revenue, right? Certainly something to consider. Obviously, losing $1 billion in revenue is not good. But as far as why I'm interested, the valuation dropped way more than what $1 billion in revenue would have entailed, and that's an annualized amount. And by no means is that their estimate. They're saying that they are going to lose that much in revenue, right? This is a business. If management is smart about this, they have no reason why they won't be able to adapt from this and find other ways to make this revenue. There could be anything. Obviously, from online ad rates, prices are still increasing. A lot of money to be made in that space. Any other fees, management fees on top of their electronically traded funds or ETFs. There's plenty of things that TD can do here to neutralize that impact a little bit more, make it a little bit less significant. One thing I really like about this company as well is just how good of a profit margin they have. So if we're looking at a trailing 12-month revenue of around $5.7 billion, out of that they made $5 billion in gross profit. Right? Is that crazy to anyone else? I mean, that is a lot of profit. It's something to absolutely consider. Definitely, I love the fact that this is a company with $10 billion on hand in terms of cash. Love it, love it, love it. And I also see, debt around $3.5 billion. The cash very much outweighs the debt, so this is not a company you need to worry about in terms of going out of business or anything like that. So $1 billion certainly can hit them in the short term, but I know for a fact they're going to bounce back long term. And frankly, I don't know if this commissions fee trend is necessarily going to stick. We'll see how things go in the future. I mean, if you think about it, there's companies like, if we're looking at Robinhood, who started this commissions-free model, right? They're kind of the face of it, is what I should say. Can't say they started it, but they're the face of it. They make a lot of their money off of Robinhood Gold, which is their subscription service, which allows extra market data, market research data from an analyst, who I hate. Screw you, analysts. Allows you to borrow money, so they offer lending through that without fee. I mean, there's so many ways in that aspect for TD to evolve and make up that revenue elsewhere and potentially make more than what those commission fees were. So we'll see how they treat this in the future, whether they just disband the commissions free after a year, whether they decide to go out with a new program like Robinhood's Robinhood Gold. That was an interesting thing to say, Robinhood's Gold. We'll just entirely see. I don't know where things are going to be in terms of short-term stock price. That's not necessarily what I'm chasing after. I think overall, I'm very interested in what's going on in terms of share price long-term at this point. I mean, it looks like the valuation just dropped so much, I couldn't stop myself. You know what I mean? And I wouldn't blame you if you looked into the company as well. What else do I love about this company, right? What do I like about TD Ameritrade? Well, they're a company that's been consistently beating on earnings per share as is, right? So obviously this is going to hurt them a little bit, but they've been consistently beating on earnings per share, which is fantastic. I love it. They've been consistently beating on revenue as well. Not only that, but they've been growing revenue pretty rapidly. If you look here over the past 2 years, starting to see some 40-50% growth year over year. Just most recent quarter, not nearly as much, but up to a quarterly revenue of around $1.5 billion. You know, that's obviously what they said going to get hit by around $250 million. Something to consider with that. So we might see a little bit of revenue decrease, but they built that buffer. They certainly built that buffer. So yes, it might send them back 2 years in terms of where their revenue is looking, but overall, I think the trends are great here in terms of the company. Just consistent revenue growth, which is what I like to see, because that revenue growth makes me happy. So look at that. I love this low PE ratio. There's so many things that I enjoy about it. What else do I love? I love dividends, and you know this. So right now, with this recent drop, right now the yield is somewhere around 3.58%, which, woo-wee, I love that. Love it. Love a dividend yield at over 3% usually, as long as it's not too high. I love to see it. Obviously, it wasn't that necessarily before, but that equates to 30 cents per share every quarter. It's a quarterly, and a very good payout ratio of 31.72%. Good grief. I love it. And on top of that, we can look at dividend growth too. So they're a company that has been consistently growing a dividend. Look at that. I love it. I love it. I love it. Consistently growing dividends. That's what I like to see. I mean, what more do you want? That's all I can tell you. What more do you want? There's a company obviously with a low payout ratio. I just don't see what else you could possibly be interested in with this company. I mean, oh look, right as I make this, why not? TradeStation jumps into commissions-free investing. So again, all these companies are getting hit pretty hard today. So TradeStation, we don't care about TradeStation, but there's a lot going on right now, and I think short-term stock might be hit pretty decently. I think it's already been hit the majority in terms of what's going to happen to it. So just keep an eye out. Keep an eye out for what's going on here. It's a very interesting stock to me. I'm buying it. See if you're going to be interested in buying it. This is my spotlight. So I like the company right now. Honestly, as a broker, I like them. I think they're pretty good in terms of brokerage. Pretty easy to find out, figure out information. I do like them, but we'll see how they innovate in the future. It's going to be interesting to see what's going on, but I hope you enjoyed.